makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it's been a big week in markets, politics, and, of course, tech. Wall Street has rallied as the data gives the Fed the all-clear to cut. Another political killing shakes the U.S. while the fallout continues from the Epstein email revelations. In tech, OpenAI also edges closer to becoming a for-profit company as it reshapes its relationship with its top shareholder, Microsoft. So there's a lot to discuss with Karim Chedid, head of EMEA investment strategy at Blackrock, and our very own Rosalind Matheson. So thank you both for joining us. Roz, let's get us started with OpenAI. I mean, it's a pretty big deal.
Well, that's right. And so you've got a company that started with these kind of charitable goals but became this behemoth. And how and all of that do you stay true to those originating goals? And how can you structure yourself to do that in the reality that you kind of need to start to return money to shareholders? And so the structural conversation has been very, very fraught. The idea now is that the non-profit arm basically gets a stake in OpenAI, possibly $100 billion, 20%, through a public benefit corporation. And being a public benefit corporation means, again, you are saying you're holding true to your originating goals of benefiting, society as a whole, but it gives you some wiggle room, essentially, to make money also and to return it to shareholders. And this has been the complexity of getting Microsoft in and agreeing to the structure. Does that get over the line? It's not the end of the road, though, because you've got a couple of states scrutinising OpenAI and its structure. You've still got Elon Musk taking pot shots from the sidelines. I mean, and legally too, saying that he thinks that OpenAI is diverting from its foundational goals. So this is not the end of the line, but at least it's an effort to get some kind of structure in place.
Rosa, what can you tell us about Scott Bessent, who's also in Europe, actually in Madrid?
Well, interestingly, he's coming through Spain, it seems, on the way to the UK, no doubt, next week as part of Donald Trump's visit to the UK. And it's a grab bag of things he's going to be talking about with the Chinese vice premier. So obviously trade, but also money laundering, TikTok. And we've got a TikTok deadline again at the fourth deadline, I think, coming up, because Donald Trump is extending it. The future of TikTok on the table. But what it does show is that there's quite a lot of conversation going on between officials between the US and China. This is not the only meeting we've seen of late at a whole lot of different levels, and it's all about trying to pave the way for a meeting between Donald Trump and Xi Jinping, maybe in October. I mean, they're going to cross paths before that in September, but the idea is before the trade deal that they've got, which is sort of temporary, is up again in early November. Can they have a proper summit? Can they collectively announce, hey, the two of us have got a proper deal between us, have that big moment? And so what those conversations are going to be about is really getting all those things knitted away to have that proper deal and that proper summit.
And Karim, I know a lot of the focus, if not all the focus of the markets right now is on everything that's happening in the Fed. But again, I mean, it's just a big week geopolitically because of the US, China, because also of what we saw at the border of Poland. Is that fed through in the markets at all?
I mean, the way that we look at that is really to consider what's happening in gold. And when I zoom out and look at the bigger picture here, gold flows have continued to hit record levels this year when I look at the global ETF landscape. And this is because gold has been the go-to geopolitical hedge of choice. So yes, I think it has fed through. I was looking at the gold prices year to date, and they have challenged all-time highs 26 times compared to 12 times for the S&P. So it's definitely there.
So is the only way of diversifying away from, equity, is it all gold, actually?
No, so when we look at our investment directions, which we launched this week for the rest of this year, so what are the themes for the rest of this year, we focus on multiple ways to hedge portfolios and to think about diversifiers in portfolios in an environment where stock-bond correlation is at best unreliable. And so we look at hedge funds, and here we look at a blend of hedge funds, a mix of macro hedge funds, systematic hedge funds that can really act as you fund them from stocks and bonds as a diversifier in a portfolio alongside gold.
There's, again, a lot to talk about on central bank independence, which is one of our big themes that we've been trying to figure out. It feels like the next couple of weeks will actually be crucial, and then we'll get on to Fed expectations.
Well, yes, because we have the Fed coming up, but we also still have that legal case going on with Lisa Cook. And that's going to potentially bleed right into the start of the Fed meeting, because the White House is asking again in this kind of game of legal ping pong that we've seen over Lisa Cook. They want another stay. So basically they don't want her to be able to take part in the FOMC next week. She says she's preparing for it either way. But, they're asking the court to decide essentially on Monday, possibly, if she can take part. And so you've got the immediate impact of her participation in what could be quite an interesting conversation that week with the Fed, but also in the longer term, can the White House keep her out of her role while all these court cases are playing out? And so all of that's going to feed into the dynamic around the Fed next week, regardless of the conversation around interest rates, regardless of whether they cut interest rates, as many people expect they will do, because the economic environment demands that they cut interest rates. But, whatever the Fed does from here is always tinged in the background with that sense of, was there any kind of political conversation in all of this? Was there a sense of the political mood in all of this? The Fed will say, we're moving interest rates because the economy says we should, and all the data, has been building up to that. But if they move in the direction that Donald Trump wants, people will still wonder.
Yeah, and I mean, to that very good point, will people wonder? And the market is actually, again, largely ignoring some of the independence questions.
Sure. I mean, let's look at the growth and inflation numbers and take stock. The market is now pricing 3 cuts for the Fed by end of this year and 6 cuts by the end of next. And I think that's a little bit overdone. It's a little bit too dovish for the growth-inflation trade-off that we have in front of us. So when we look at the growth numbers, labor market is softening. There's no doubt about that. You see it in the non-farm payrolls last week. You see it in the jobless claims yesterday. So there's enough weakness there and enough disinflation to merit a cut next week.
That's a doubt. I mean, that's 100% undoubted. But that's very recent, right? It's since last Friday.
Exactly. Yeah. But when you look forward to 2026, I mean, you could start to see tariff impact on inflation numbers create an inflection. Yeah. You could also see a boost to growth from Fed cuts later this year amidst a tight labor supply causing labor market inflation as well. So there are multiple things we're watching for inflation inflection, which suggests that 6 cuts next year is too much.
Karim, what are you expecting, 50 or 25?
25 is our base case. I don't think enough faltering in growth has happened to merit 50.
In geopolitics, Roz, I mean, it was just very, very big week on multiple fronts. It's very clear that, the drones that were taken down by Poland just has everyone just on edge.
Well, that's right, because there's obviously the conversation of, again, was there intent behind the drones that came into Poland? Donald Trump seemed to be saying overnight he didn't think it was intentional. You've got other people, including Ukraine, saying, hang on, you look at the trajectory of these drones and it does look pretty intentional and towards a specific site inside Poland. And was this a tester? But again, because Vladimir Putin's, his ability is he tests and sees the response, right? So in the early days of the war in Ukraine, he kept on floating ideas of using nuclear weapons. He was always pushing to see just how far he can go and get away with it. I mean, I don't think anyone expected him to use nuclear weapons, but he kept putting it on the table. And this is what he does. He keeps everybody on edge. And what's very clear in all of this, including what we've seen inside Ukraine itself in the past couple of weeks, is that Vladimir Putin doesn't have any great intention to end his war in Ukraine anytime soon, whatever he's telling Donald Trump. And obviously his gambit is that Donald Trump, wanting that meeting again with Xi Jinping, is not going to put economic pressure on China, which would be the real thing for Russia's economy and the Russia energy side. It's one thing to go for India, it's another thing to go for China. And the dynamic for Trump, the priority right now, is probably getting that meeting with Xi Jinping.
And Karim, the other thing we had this week is, of course, a new prime minister in France. It was, extremely interesting to look at the ECB president trying to not say too much on all of these issues. And then we have a lot of the officials from the European Central Bank now diverging on where rates should go next, with, I think, the governor of the Banque de France saying a cut is possible. What happens to the ECB from now?
Yeah, and I was in Paris this week, a very interesting time to be speaking to the market there. But I would say that, when we look at the ECB path, we do see them now in wait and see. So wait and see at 2% until we have a bit more information about the growth picture. In Europe, growth has not faltered too much, but it's still in a low-growth environment. Our economist and our fixed income team is predicting about 0.5% growth for the next year. So it's a pretty meager growth environment. I think as we enter the last months of the year, we could see one more cut from the ECB. Lagarde certainly kept that door open this week, but it's not a done deal.
Okay, thank you both for joining us. Karim Chedid there from Blackrock and our very own Roz Matheson. Coming up, as Russia breaches Poland's airspace, as we were just talking about, the U.S. is also rocked by a political killing, and France gets another prime minister. So it's been quite a week in geopolitics. We'll be speaking to Ian Bremmer, founder of the Eurasia Group. That's next, and this is Bloomberg. Where do you see Russia going?
Oh, it's not looking good. You know, I'm very honest with you. With the current regime and with President Putin, I don't see big change. You know, nations that don't have a capacity to deal with their past, they have a very difficult time to look into the future.
The world marvels as tiny Finland halts and holds the giant invader. Soviets may command the sky of Finland, but the invader will meet resistance on Finnish soil.
There is this, you know, imperialist DNA and undertone in Russia, which doesn't seem to go away. Russia is built on empire. That's why Putin talks about the Ruski Mir, Great Russia, borders to the 1800s, which has, you know, one language, one Russia, one religion, and one leader himself. So I'm not very hopeful about the future of Russia right now.
And you can watch the full interview with the Finnish president today at 5:30 p.m. in the UK. That's 7 p.m. Well, it's not separately. It's 7 p.m. Eastern in the U.S. And you can also watch it on the Bloomberg website and on the terminal. It's the first of 6 episodes of the first seasons of Leaders with myself, Francine Lacqua. Now, President Trump says incursions by Russian drones into Polish airspace could have been a mistake, a comment refuted by the Polish Prime Minister Donald Tusk, who says it wasn't. It comes as NATO prepares defense measures to strengthen deterrence across the alliance's eastern flank. Now, to discuss the global geopolitical landscape, we're joined by Ian Bremmer, the Eurasia Group president and founder. Ian, thank you so much for coming on.
Hey, Francine.
Congratulations, first of all. Also, you had a great summit yesterday discussing a lot of the geopolitics things that we're going to do now. Look, this week had it all, really. What do you make of what happened in Poland? Is this like a step up from Russia? Is this, you know, retaliation, or is this escalation?
Oh, I mean, it's a test. The Russians are testing NATO. They're testing the United States. They want to see if they can get away with this escalation, if they can drive a greater wedge between the United States and Europe. They have no interest in having talks directly with Zelensky, despite Trump and others' efforts to make that happen. They have no interest in a ceasefire, despite the willingness of Zelensky to accept one without preconditions. And they have found that the United States said nothing for 24 hours from the White House. There was a strong statement, by the way, from the U.S. ambassador to NATO, but he's not the president. And the president looks radically different on this issue than every other major NATO leader, of course, including Mr. STUBB, our friend Alex, who you were just talking to.
But Ian, is Putin trying to engage NATO in a war, or is this just testing the limits?
It's not meant to engage in a war. There was no military strikes, and so as a consequence, there would be no Article 5 question. But the idea that the Russians have sent 19 drones into Polish territory, one of which was down some 300 kilometers inside Poland, this is not like the earlier occasional Shahed that was going through the edge of Polish airspace into Ukraine, which by itself is unacceptable. But this is a significant ratchet up. What can we get away with? And what the Europeans are finding, what the Ukrainians are finding, and I've had many talks in the last 24 hours with European leaders on this, is to a man, they all say the United States is increasingly unreliable as an ally. Now, that is music to President Putin's ears. That's exactly what he wants to see, especially coming off of that big World War II commemoration where he's standing on stage with Kim Jong-un and, much more importantly, Xi Jinping. So the Xi Three, as I've been talking about them. I mean, this is a more significant strategic relationship between Russia and China than heretofore. Increasingly feels like not an alliance. But it matters on the global stage.
Yeah, but so what's the right way for President Trump to look at this? I mean, after all, he's the one who
when you say
brought
right way,
him
what
to
do you mean
Alaska.
by right way? Explain what do you mean by right way.
So he brought Vladimir Putin right to Alaska, rolled out the red carpet, and saying, actually, he listens to me. And in the last 2 to 3 weeks, we've seen anything but that. How does he save face?
Trump has to, from Trump's perspective, he blames other people. So he comes to the Europeans, he says, okay, 100% tariffs if you're willing to put them on China and India because they buy all this oil, then I'm with you. Knowing full well that is a non-starter. Lindsey Graham, Republican senator, very close to Trump, has been trying to do the same, talking to Europeans directly, saying, hey, if you guys do this, we're willing to do this. Trump knows full well this is not happening. So from Trump's perspective, what he needs to do is blame somebody else. Blame Zelensky for treating him badly. Then he buckled under, so now blame the Europeans for not doing enough. They're stepping up. They're doing more militarily. Blame the Europeans for not taking on the sanctions. It can't be Trump's fault. It can't be Trump's fault. Trump is not to be blamed for anything. Now, Trump did say, of course, that he was going to resolve this war in 24 hours. He did not say 24 consecutive hours, so perhaps it'll take a little longer. But he has admitted of late that this has been a lot more difficult than he expected. This hasn't gone the way he's wanted. That's the closest he's admitted to geopolitical defeat on a major issue over the last 9 months. And Trump doesn't like that. He's not comfortable with this. He wants this issue to move on. He wants it to be somebody else's problem.
Does Donald Trump want to be part of that Xi 3 group?
Does he want to be part of the Xi 3 group? No. No, he doesn't. You saw the posts when he said that they're conspiring against the United States. He doesn't like it. He doesn't like the fact that he wanted to get the Chinese to, sort of buckle under when he did his Liberation Day, and China didn't pick up the phone, and they put their own tariffs on just as much as the Americans did, their own trade embargo, and then they squeezed the Americans on critical minerals, so much so that the Americans had to back down. Trump also wasn't happy with Kim Jong-un. He did his big, beautiful letter, the most beautiful letter, the love letter that he got that first time around, exchanged it, showed it to people. Couldn't get anything done, so much so that we now find out just a few weeks ago, New York Times reporting quite something, that Trump ordered a SEAL team to invade North Korea to plant a surveillance device. He failed. So what we're seeing with the Xi 3, with Xi Jinping, with Vladimir Putin, and with Kim Jong-un, it turns out Trump doesn't have the cards. And that's a very uncomfortable place for the most powerful leader, the most powerful country to be.
Ian, the assassination of Charlie Kirk was shocking to everyone. How does it change America?
It's devastating. It's horrifying. Charlie Kirk, whether or not you agree with his political views, was someone that engaged in debate. He was someone that believed in talking to all sides. He's someone that steadfastly opposed political violence, opposed civil war. He did not want to weaponize institutions against fellow Americans. I think that's an extremely important message. It is one that has been lost in the hate and the anger that has come out as a consequence of his senseless, horrible death. Political violence has no place in my country, and yet we're seeing increasingly significant amounts of it. It's pitchforks. There's a lot of anger, and the likelihood that we see a demonization of a group of Americans as a consequence of this, I think, is significant. Political violence usually begets more political violence. And certainly there's a great lack of empathy. There's a great lack of compassion. There's a great lack of trying to meet people where they are in the United States. I think Charlie Kirk was part of more civic engagement, and his assassination is going to leave a hole.
Is there anyone that can bring the country closer together, that basically heals some of the divisions politically? I mean, it's a country that's split on the political front, ideologically.
There are a number of major wars going on in the world right now. They're escalating. We just talked about Russia, Ukraine, and the Poland issue. You can talk about Israel and the axis of resistance escalating. The war between Americans and Americans is escalating too. It's not a civil war, but it is a political war.
Could it be a civil war?
No, I don't believe it could, but it could get a lot worse than it presently is. I mean, we could see a significant amount of internal violence, of social discord, that could make the United States a much less representative democracy, could make it much harder to have legitimacy in your political leaders. And there are forces in the United States that would like to see that happen. I was
Political
very
forces?
chilled. Yes, I was very chilled by Stephen Miller's deputy chief of staff in the White House, his post, which I think is the most politically significant that has come out in the United States since the assassination, which was vehemently ideological. It was strident, and it was forceful. And it was there was no willingness to bring down the temperature. It was, let us use this to maximally escalate the agenda that we want to put forward. And some of that agenda feels to me very extra legal, feels outside the Constitution. And of course, Trump himself does not believe that laws should apply to the president. He believes that the U.S. president stands above the legal system. They've made that argument to the Supreme Court of the United States. As checks and balances erode in the U.S., and some have eroded, the Republican Party will not stand against him on any issue. The Supreme Court will, and the military will. No. But the U.S. is today the weakest and most dysfunctional of G7 democracies. And that is a serious concern, given it's also the most powerful, it's most economically successful.
Ian, I have 40 seconds left, but I have a viewer question on social media. How is this fueling actually some of the hatred?
Look, when you see a figure that was this beloved, a young guy, 31 years old, on a college campus, a father, a husband, gunned down, and I inadvertently saw the video, and it stopped me in my tracks. I think that this creates so much hurt and anguish and pain in a country that has a lot of political dysfunction, a lot of guns, a lot of mental illness, a lot of drug problems, and isn't fixing it. It's going to cause a lot more political violence.
Ian, thank you so much for joining us today. Ian Bremmer there, Eurasia Group president and founder. Coming up, we'll go back to our other top story, which is tech. OpenAI and Nvidia set to plan to pledge billions of dollars in UK data center investments. We'll have plenty more in our scoop next. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. U.S. inflation and jobs data cement expectations of a Fed cut next week. Treasury Secretary Scott Bessent heads to Madrid for talks with China's vice premier to discuss trade, security, and the future of TikTok. Plus, Bloomberg learns that OpenAI and Nvidia are set to pledge billions of dollars for UK data center investments as they join President Trump on his state visit next week. So the ECB Governing Council member Christodoulos Pastadilis says the central bank is in a comfortable position and has no need to lower rates further to deliver stable inflation. Well, he spoke to Lizzie Burden after the ECB left its deposit rate at 2% for a second meeting.
The risks to inflation are balanced. Nonetheless, we do live in a world that is becoming all the more uncertain. So uncertainty is on the rise on many fronts: geopolitical risks, trade tensions, and other developments across the globe. And therefore, even though we are saying that the risks are balanced, this is not a very strong argument to make, because of the existence of these risks.
So with all of those risks in mind, is it sensible to keep your monetary powder dry?
It is sensible to keep our monetary policy dry, but at the end of the day, we do forecast, we do make our projections as needed, and we do expect that these things will play as per our projections.
So if you were to move again, would you need forecasts to vote to do that?
We would need additional information. There would have to be a significant difference in economic fundamentals, in economic projections, and other data. So yes, we would.
But to be clear, is October live? You could move without those projections?
One cannot preclude anything. Yes, we could move if the need arises, if there is an event in the economy that warrants a change in the interest rates.
Well, that was the ECB Governing Council member Christodoulos Patsalides. Now, Sébastien Lecornu took over as France's Prime Minister this week, pledging big changes to try to rein in the country's debt amid hostility to budget cuts. Now, to add to his entree, Fitch may downgrade the country's credit rating later today. Well, joining us now is Jean Dalbard from Bloomberg Economics. Jean, thank you for joining us. So the government has collapsed and a new Prime Minister has been appointed. What comes next? Is it going to be practically impossible to get a budget through?
I mean, his new job is basically to try to strike a budget deal with the center-left and the center-right. And for that, he will have to make some concessions, both on the size of the fiscal package, but also on the measures to be implemented, and especially on the taxation of the more wealthy people in France. And it would be particularly complicated, especially because the deadlines are pretty tight. He should present a budget to Parliament before the end of the first week of October. So it's a pretty short period of time.
So what would be the impact if Fitch were, for example, to downgrade France tonight?
So absolutely, yes, the French rating is at risk. We think it would be a pretty close call because Fitch is laying out some conditions on the medium-term fiscal plan which are not fulfilled by France. But in the meantime, the growth outlook has been pretty good in France recently, so it would be a close call. And we think the impact will be very moderate because basically it's already priced in. France is currently trading like a BBB, like Italy, so it's priced in. And we think the main driver of the spread is basically the political premium at the moment. But if we look ahead, the main risk for France is not Fitch. It will be the closing rating gaps with Italy and with Spain, which will bring more competition from other European issuers. And that's the main risk for France, basically.
Jean, thank you so much. Jean Dalbard there from Bloomberg Economics joining us from Paris. Now, here in the UK, Peter Mandelson's advisory firm is cutting ties with him after emails published by Bloomberg showed he believed Epstein's first conviction in 2008 was wrongful and should be challenged. Global Counsel, the strategy and communications firm, was founded by Mandelson with Benjamin Webb-Prosser in 2010. The cachet of embarrassing emails saw Mandelson sacked as Britain's ambassador to the US yesterday. And Bloomberg has learned that the leaders of OpenAI and Nvidia plan to pledge billions of dollars in support of UK data center investments. Now, this comes as US tech executives join President Trump on his state visit next week. Sources say the two companies are teaming up with London-based data center business Nscale. Now, for more on our scoop, we're joined by our Bloomberg Tech Europe anchor, Tom McKenzie. Tom, thank you for joining us. Congratulations also on a great tech edition today. But what else do we know about these data centers and the investment pledge that the Americans will put forward?
Yeah, so Jensen Huang will be here alongside Sam Altman, of course, of OpenAI, so the leaders of OpenAI and Nvidia with President Trump. And the idea is, or at least according to our reporting from our team, is that they're going to be committing potentially tens of billions of pounds, particularly around the infrastructure piece, so data centers, which will house, of course, those Nvidia chips. I think a key question going forward for the UK is, do we have the energy to be able to support those? Because energy prices in the UK are more than 3 times those of the US. And in terms of the spend, tens of billions sounds like a lot, but if you compare it to the commitments of $500 billion US dollars just for the Stargate project in the US alone, it really kind of pales into comparison. The Prime Minister and his team will certainly cast this as a step in the right direction. And it is a Prime Minister who is committed, he said, to ensure ensuring that the UK is building out this infrastructure. So it will be a move in the right direction. There's question marks about the energy, and there's question marks about whether or not it's really going to close the gap or at least position the UK when it comes to the infrastructure piece that powers these models.
Talking of AI, you had a fantastic interview with Demis Hassabis of Google, one of the greatest minds, I think, in AI. What did he tell you about the role of AI in medicine and the goals they're trying to achieve?
So we really lifted the lid on the unit at Alphabet that's called Isomorphic Labs, which he co-founded, which he founded, and of which he's the CEO. And the mission statement of this business is to solve all disease. It sounds almost ludicrously ambitious, but this is the team that solved the protein folding question that had befuddled biologists for more than 50 years, that many thought was impossible. They did that with AlphaFold 2 with their model. So they are building on this, and they have models that are more powerful than AlphaFold 3. He thinks ultimately we can get to a place where we can shorten drug discovery times down to months, weeks, possibly even shorter. He thinks that could happen in a couple of years. He also thinks that solving the question of cancer, tackling cancer, is a proposition that could happen in our lifetimes. Take a listen.
The kind of holy grail in a way is to try and tackle cancer, but we've also done it for practical reasons as well, because the clinical aspects of that are favourable for new drugs, because obviously the disease is so serious.
So Sir Demis Hassabis talking to me exclusively. Look, he was very clear there are still scientific and technical hurdles that need to be overcome before you get to that point. But he says progress is being made, and crucially, shortening that time frame around drug discovery, he thinks that could be something that we look at in the next couple of years as a real impact. He also talked about the talent wars, by the way. I asked him about Meta and Mark Zuckerberg spending $200 million to attract individual names to Meta. He said he actually thinks it's rational, because he thinks this technology, AI, is going to be so transformative. He thinks within that context, the spend on that talent makes sense, essentially.
Tom, thank you so much. As ever, Tom McKenzie, their host of Bloomberg Tech, with that great interview with Demis Hassabis. Now, the UK's attempt to position itself as a tech powerhouse has received a boost with our scoop that we just discussed, OpenAI Nvidia setting to invest billions in data centers. But London is also keen to lure tomorrow's big companies to IPO in the city. Now, this week saw Swedish startup Klarna list its shares in New York, bypassing the London Stock Exchange. Well, one company that is optimistic about Britain's fintech sector is credit score provider ClearScore. Its CEO and founder, Justin Basini, joins us now. Justin, thank you for being here. So why are you optimistic about the UK? Or London specifically? Is it the UK or London?
UK generally, but fine. London as a market. UK is still a great place to start a business. We have fantastic universities, fantastic talent. And what you see in the fintech sector is you see a huge amount of great companies being created in the UK. And the Klarna IPO is a fantastic example of money being returned back into new companies that will get invested. And so what we need to see is we need to see that happening in the UK.
Are you not frustrated that they didn't IPO on the London Stock Exchange but decided to go for the US?
Well, I think, Klarna's a fantastic business and they'll make their own decisions. I think there are lots of reasons why one would think about listing in the UK. For ClearScore, we've just announced our results, so we're up 17%, up to 90 million in the UK, making close to 20 million of profit. And as we grow over the next few years, the UK will be a natural home for us, I think.
What's the most difficult thing to do if you're in the fintech space? Is it getting access to scale? Is it growing bigger? Is it having access to Europe? Is there anything that this government could do to make your life easier?
Yeah, I think the UK has done a great job over the last sort of 15 years of creating incentives to invest in startup companies, and we have a lot of startup companies here. The challenge for the UK now is how do you scale companies to be globally consequential? And so what needs to happen now is we need to see the cadre of companies like the ClearScore Group, but there are many who are now really starting to scale in the UK and internationally. We operate in 5 markets around the world, close to 26 million users. And what the government can do is really start to use, fast-track regulation, start to open up markets, support exporting, so that you can create these companies that are globally consequential.
Justin, I yet have to meet a CEO that likes any kind of regulation. But is this because there's too much regulation? Is it because it's the wrong kind of regulation? Or it's just there's too much red tape?
I think fintech is founded on regulation. So, you need to have strong regulators. You need to have the rules that are clear. I think what we would want is which I think this government is doing, is starting to really try and get coordinated regulation and to try and speed it up so that decision making is quicker and so that we have more confidence that we can move through into other vectors of growth, and the regulator is going to support us in that.
Are you seeing quite a lot of pull of capital from outside? Again, we look at the budget. It was last year. We have a new budget November 26. Some of the things that are just applied to companies, how much of a setback is that for, fintechs, given you may want money from big US investors or pension funds?
I mean, the UK is still a great place to raise money. All of the major funds around the world invest both privately and in the public markets in the UK. And so you still get a huge amount of access. Obviously, anything that hits profitability or potential profitability means that you need to factor that into your plans. But the UK still has a huge capital base. I think one of the things that the Chancellor could do, and we're very interested in, is bringing retail money, more pension money into private capital, private companies.
Which they're trying to, right?
They are
Is that fair? Is it making a difference? I mean, it's like 5-6 months old.
I mean, I've spoken to 4 or 5 of the major pension funds in the UK over the last 6 months as we start to think about IPO and as we start to think about bringing those institutional investors on board. And they're interested in companies which grow and also return profitability. And that, something like the ClearScore Group and many of the other fintechs have that real sort of balance between high growth and profitability, which I think is important for success in the UK market.
Can you find the right people to hire?
Access to talent is always a challenge, but we have to remember that the UK still has a great set of potential employees, great universities, a great skills base. We need to continue to invest there, and we need to continue to support that.
Just how do you think about the skill space going forward? Again, with AI, I mean, there are a lot of kids at university that don't really know what the jobs of tomorrow will be. Some of the doomsayers say, look, there are only 5 real jobs that will stay as is from what we know now. How do you see your workforce developing in the next 10, 15 years?
I'm actually super excited about it. You see, like the bedrock of any good economy is innovation, and the ability to create new ideas and to execute them now, given AI, the barriers to entry are so much lower than ever before. And so I spent time in universities, and you can see all of these young people, hugely talented, able to execute their ideas very, very quickly. And so I think AI is going to be a real driver of productivity, and I think if you can combine it into your company with really talented people, that's the sweet spot.
You hear in the corridors of power that actually there could be a brain drain from the US into the UK because it's an English-speaking country, because some of the things that the Trump administration is doing with universities. Is that true, or is it wishful thinking?
I think from the conversations that I have at universities, they are seeing applications from US students and academics increase over the last year, and I think that's a great thing. The UK still has an incredible university sector, some of the best universities in the world, and so that talent coming to the UK, I think, is going to be a great thing.
Justin, what can I see for ClearScore? So what are you expecting? What are your targets over the next 18 months and then for 3 and 5 years?
Yeah, we want, over the next 3 years, we want to double the business. So we want to move towards 50 million users. We want to move into other markets. We think there's still a lot of opportunity in the UK. That will take us up to close to sort of 250 million pounds of revenue and 50-60 million pounds of profit. We think at that stage that is a very, very exciting prospect for institutional investors, and we might think about an IPO. We're not slavish about that, but we think that might be a really exciting future for ClearScore Group.
Are you thinking, where would you list?
London.
No question.
I mean, we'll look at everywhere else, but, we have a UK franchise. We're a well-known brand in the UK. 75% of my revenue comes from the UK. And I think our combination of, as I said, growth and profitability will be very attractive to UK institutional investors.
So good. Justin, thank you so much for joining us. Justin Basini there, a chief executive and co-founder of ClearScore. Now, coming up, we'll take a look at what Giorgio Armani's will means for the future of his fashion empire. That's next, and this is Bloomberg.
When I was playing golf with President Trump, we had a really good time.
What was President Trump like on the golf course? You played for 8 hours?
Very talkative. Golf is a nice social setting. And again, going back to my dad, I remember my dad being very encouraging and saying, Alex, even if you don't become a golf professional, golf will be useful for you one day. And I was going, yeah, sure, Dad. And sure enough, there I was on the first tee with President Trump. And, I had a good time. And it doesn't, the fact that you have a good time with someone doesn't mean that you agree with them. Especially coming from a small country. What you want to do is you want to, nudge things in the right direction. And that means that you have conversations which sometimes can be difficult and awkward. Sometimes they can be good. And then, the rest of it is about getting results. And I hope I get results with my diplomacy.
But if you have a good time, does it mean that they listen to your arguments more?
I don't know. You have to ask them.
What did you learn about him? I mean, is he different?
Actually, this is the thing. And I've always said this, that funnily enough, and I hadn't really played golf for 35 years. I mean, when I quit. But I've always said it. You learn about the personality of a human being on the first hole of a golf course. You see if they're edgy, if they are impatient, if they're frustrated, if they're fun, if they're relaxed. And I have to say, I had no uncomfortable moments during that round. And we hit good shots and bad shots. So, people are quite different on a golf course sometimes.
Well, another reminder that you can watch the full interview with the Finnish president today at 5:30 p.m. in the UK and then 7 p.m. Eastern in the US. You can also watch it of course, online on the Bloomberg website and on the terminal. It's the first of 6 episodes of the first season of Leaders with me, Francine Lacqua. Now, the Fed looks set to dominate headlines next week. Underlying U.S. inflation rose as expected in August, keeping the Federal Reserve on track to cut interest rates. Ven Ram, Bloomberg's MLife cross-asset strategist, joins us. Now, Ven, thank you for being on. U.S. CPI data, as expected, keeping expectations for a rate cut from the Fed. I mean, is there any world where the Fed doesn't cut?
Well, I think it's hard to envisage a world where the Fed doesn't go next week because, all the economic indicators that we have had since the June meeting and the July meeting, they show that, the economy is shifted down to a lower gear. And I think that, it's pretty obvious that the next 2 rate cuts are kind of the easy pickings for the Fed. I think they've got room to cut till 375. The question really is for the next week's dot plot, Francine, is what happens with with the dot plot that they indicate. I mean, they've indicated 2 rate cuts this year. I think that they will move to 3 rate cuts this year, which is already priced by the markets. But also what happens is, how much will they pencil in for next year? They penciled in just 1 rate cut for next year, after 2 rate cuts this year. So I think that, that's going to move a lot. And I think they will indicate 2 more rate cuts probably. But all this needs to be kept in mind in the context of a Fed composition. The FOMC composition is going to change next year. We are going to have a new Fed chair next year. So I think, the question is to what degree the markets believe the dot plot from next week is the question. Which is why if you see the 2-year Treasury yield, Francine, it hasn't moved much. You would have expected it to rally, but it hasn't happened.
Ven, I mean, the other big market story this week, of course, is what happened with France. There's a key review this afternoon on France's debt rating. What are you expecting?
Well, I think that, Fitch has already indicated a negative rating outlook that makes the likelihood of a rating downgrade that much more likely, that much more imminent. And I think I wouldn't be surprised, for one, if they actually lowered the rating this evening. But having said that, I think that France is already trading like a credit that's much worse than what it is. It's not trading like a AA- credit. It's trading like a BBB credit. I mean, it is trading on a par with Greece. It's trading on a par with Italy. So I think that, the traders are already discounting the news heavily. So what will be interesting is if Fitch downgrades the rate, the market does subsequently when the market opens on Monday, since much of the rating downgrade is already factored in.
Ven, overall, I mean, because of next week, and the Fed pivot, is that going to change probably certain asset classes or other currency and bond markets across the world?
Well, what's been interesting, Francine, is that, the dollar is, it used to trade with a definite risk premium, negative risk premium that was embedded into it following the Liberation Day tariffs. And in April and May, that risk premium was pronounced to the extent that it was trading at nearly a 6% discount to its fair value. But what we have seen of late is that it has closed that gap. It is just nudging the gap, and it's the differential between what the models show and where it is actually trading is less than 1% deviation. Shows a less than 1% deviation. That suggests that the risk premium has gone away. So the dollar is purely going to be a yield differential play going forward. And that Sell America theme has gone away for the markets, at least for the time being. And that's the most significant takeaway for the dollar investors.
Ben, thank you so much. Ben Rand there with the very latest on some of the market dynamics. Now, Bloomberg has also learned that Giorgio Armani has left the entirety of his closely held company to his foundation, family members, and longtime aide, Leo Dell'Orco, who will oversee the Italian fashion house following the death of his namesake founder. Now, the details of Armani's will also sets up conditions for the foundation to sell an initial 15% in the company to LVMH, EssilorLuxottica, L'Oreal, or another company of similar standing within 18 months. Well, joining us for more is Andrea Felsted from Bloomberg Opinion. Andrea, thank you for joining us. I mean, this is kind of like a huge development in the story.
I was really surprised to see this because questions had been, would there be conditions for him to sell? Would the foundation sell, etc.? Well, it looks like they can sell, so that's been one thing answered. This seems to really set up the next big takeover battle in luxury, allowing for a 15% stake to be sold, and then potentially more later on. Armani's a huge name, it's big. There are very few luxury assets that become available to buy. And if they go, they don't come onto the market again. So there will be a lot of interest in this business.
So, Andrea, what happens? I mean, again, it's, the name of Armani is really quite incredible. It's one of the only few independent companies that has remained. But do we know anything about sales? How have they been doing?
They were about 2.3 billion euros last year, which was slightly reduced. It's a very well-known business, but it's also a complicated business. It's fractured into lots of sub-brands. Any buyer will need to simplify that. It's also got the licenses to Essilor and L'Oreal, which is why they have also been named. But really, Bernard Arnault has been bequeathed a great gift being named in the will. So he looks to be in pole position to take it on.
I mean, does a big company like LVMH know what to do with Armani?
Yes, I think so. Armani is very focused on clothing, so the opportunity is in leather goods, which are the real profit drivers of the industry and where LVMH really excels. You've got the beauty and the eyewear, which, as I said, are licensed. He was also one of the few designers, along with Ralph Lauren, to really realise the power of moving into hospitality, the hotels, the restaurants. That's a very big opportunity, and really that's where the future of luxury is going. And it's also where LVMH has been moving quite slowly. I think they would have gone more into this area if we hadn't had the downturn. So there's huge opportunities, but also a lot of work to be done.
Andrea, thanks so much. Andrea Felsted there from Bloomberg Opinion. Now, coming up later today, the chairperson of Tesla's board of directors, Robin Denholm, speaking to Bloomberg Tech. That interview at 4 p.m. London time. Up next, Bloomberg Brief, and this is Bloomberg.